joining for another session of our Business Tax Revision course. My name is Anne. We're going to be looking at task 5 today regarding share disposals for companies. Without further ado, we'll make our way into the actual revision question. And you will see here within the first intuition materials that we start each task with a little explanation of what the task is about. So in this case, gains and losses for companies disposing of shares. How long do we get to do it? 10 minutes, because it's worth 9 marks. What then follows is what we call a task briefing. So this is an overview of the technical knowledge as a bit of a reminder for you in terms of what you need to know to be able to cope with a task 5. If you feel a bit weak on this area, you might like to have a read through that. Just pause the lecture and have a read through the task briefing before we get going. If you feel like you're pretty much on top of that, or you certainly feel able to listen to a recording on a question, then feel free to go with it. I will be explaining things as we go along. The thing I particularly wanted to mention was here, that whenever we do share disposals for companies, we have to apply what we call the matching rules. So if you haven't learnt these yet, please learn them now. What we're saying here is if a company owns shares in, let's say, ABC Limited, so our company has bought shares in ABC, but they've been purchased over many years. When they come to sell them, how do I know which ones they've sold? Because I've purchased some here and then here and then here. Then I took a bit of a break. I purchased a few more, then a few more, and so on. My purchases have happened like over a long period of time, each time purchasing a different quantity at a different price. So when I then sell a few, maybe here, how do I know which ones I've sold? And the answer is, the first thing you would do is look to see if you purchased any on the same day. So if I did have purchases on the same day, I would match my disposal to those shares first. If I don't have any on the same day, or maybe I have already dealt with the ones from the same day and I've still got more disposals, then I'd go to the previous 9 days. So how many did I buy in the previous 9 days? And then after that, I would then say, okay, well, I've matched to the same day, I've matched to the previous 9. What about the share pool? I must have disposed of something out of my share pool. So they're the matching rules that we're going to be using. They're very important, and I'm going to be talking about those as we make our way through this question. There are some other very important things that we're going to need to talk about, being things like bonus issues and rights issues. I'm going to talk about something called an indexing event. So these questions do tend to have quite a lot of information in, but it's important that we find a method to be able to work through that so we are able to navigate our way through these longer questions. So let's see how we go. Here's our example task involving David. And David has bought some shares in a company called Hartley plc. David has then gone on to sell some of those shares in Hartley plc, and the question we have to deal with is which shares has he sold and what will the gain be? But already I can see there's a paragraph of information followed by a long list of indexation factors, and in the exam I may already be a little bit scared. So I want to give you a technique to help sort of unwrap all this information. And the way that I tend to do that is using a timeline. So this is a little bit of planning, if you like. So I'm just going to go through the question and I'm going to write down everything that happened on a date line or timeline in the order that it happened. So David bought 8,500 shares in Hartley plc in October 01. So I jot down October 01 plus 8,500. And that's as much as I actually really need to know. I suppose if I really wanted, I could add the phrase purchase. You've just got to do it in whatever detail you need so you'll know when you look at that what that means. Cost was 89,400, but I don't want to get my timeline too busy, so I'm not going to include that bit. In August 05, there was a bonus issue of 1 for 4. So August 05, there's a bonus issue 1 for 4. Now, what does that mean? Well, it means for every 4 shares that we had before, we get another 1. So we had 8,500 before, and we get 1 new one for every 4 that we owned. So we get an extra 2,125. So that gives us a little subtotal of our shares now. The 8,500 we had before, we've now got 10,625 shares. So I'm jotting down my bonus issue, I'm making a note of how many extra shares that was, and I'm making a note of how many shares I've now got in total. Again, I find the paragraph a bit unhelpful in terms of how to get through all this data, so I prefer to put it into my timeline. So I've done that one. There's actually quite a lot to say about that one, wasn't there? In terms of one little throwaway sentence in the question, then a fair little work in there. David then sells 3,500 of his shares in September 2008. So again, as much or little detail as you think you need to understand what you mean. I'd usually just put 3,500, but I'm going to write the word disposal on there as well, just so we all are very clear what's happening. Got the proceeds there. And then in November 10, there was a 1 for 5 rights issue. Oh my goodness, something else is happening now. So let's go to that one, November 2010. There is a rights issue, and the rights issue is 1 for 5. So what does that mean? Well, it means for every share that we owned at this point in time, every 5 that we owned, we get one extra. So I'm now in a position where I had brought forward 10,625 shares, and I've now just sold 3,500 of them as part of that disposal. So I just want to see how many I've actually got left. So I've got 7,125 shares. So when the rights issue comes along, 1 for 5, 1 new one for every 5 that I owned before. That's an extra 1,425 shares. So I've got a rights issue of 1,425, and that of course is going to leave me with 8,550 shares. What happens next? The next thing I think is the final disposal. In January of 2024, David sells 3,000 of the shares. So we're now at the end of our timeline. This is the final thing that we're dealing with. There's a disposal, minus 3,000 shares. Sold for 63,900. So they're proceeds. I've got all these indexation factors I'm going to come back to in a moment. I've summarised everything that's happened in terms of the share additions and disposals through the period. And the requirement, as it often is, to complete a share pool, show the balance of shares carried forward, and show my answer to the nearest pound. It's worth 7 marks. So if you remember the matching rules, I would always look to see how the matching rules are going to affect my answer first. And the matching rules say, first thing that you should do is look to see if there are any acquisitions on the same day as the disposal. Well, the disposal was in January 24 and the last acquisition was in November 2010. So nothing even remotely near the next day. Nothing remotely near the last 9 days. So everything is going to be matched to the share pool. And questions tend to go one of 2 ways. Either they give you a pretty big share pool, which is what this one did, or they give you maybe a purchase on the same day or the previous 9 days or a little bit of both, and then a much smaller share pool. We don't usually get such a big share pool like this, as well as getting things on the same day or in the previous 9. It tends to be one or the other. But I'm clear in my mind now, everything is matched to the share pool, which makes sense with the question requirement, which is only asking about the share pool. So where do I go next? Well, all part of my planning, I would next decide where I'm going to do indexing. And in terms of indexing, the rule is I index where there is an indexing event. So immediately before every indexing event, I must do an indexation calculation. So then that begs the question, doesn't it? What is an indexing event? An indexing event is something that happens that affects the cost column in my computation. So I buy the shares here, October 01. Remember that indexation is about inflation. It's like inflationary price rises. So in October 01, fair enough, I bought the shares. There's no indexation because I'm still sitting on October 01. I get to August 05 and there's a bonus issue. A bonus issue is free shares. They're completely free of charge. So there's no cost implication there as well. So I actually completely skip past that one as though it didn't happen as far as my indexation is concerned. And I just go to the next point here and then say, oh, look there, September 08, you disposed of some shares. The disposal of the shares affects the cost column. So an indexing event is a purchase because that's for cash. It's a rights issue because that involves cash, or it's a disposal because that reduces the cost of our shares. It is not a bonus issue because they are free shares. So I skip right past the bonus issue and I make a little note here. I'm going to do indexation. And the indexation is actually going to go from, if I'm ignoring this one in the middle here, just going straight past that as though it wasn't there, I'm going to index from October 01. So my indexation there is October 01 till September 08. That brings my pool completely up to date before I dispose of the shares. So before I'm doing anything new, I want to make sure everything's in order. So I do the indexation through to September 08. And then I carry on. What happens next? November 2010, there's a rights issue. That's an indexing event. So let's index again immediately before we put that rights issue through. Now I'm already indexed up to September 08, so I can pick up where I left off and say I now just need to go from September 08 to November 2010. That will bring my pool completely up to date. I can then do the rights issue, and then I go to my next indexing event, which is a disposal in January 2024. But when I come to look at the indexation for that one, I am reminded that indexation was frozen in December 2017. So I will never index to January 24. I can never index past December 17. So I'm going to do my final indexation here, and it's going to get me from where I left off, which is November 2010, until December of 2017. And that's the final indexation. And then when I get to January 24, I can deal with my disposal. So I appreciate that was quite a lot of work to say that we haven't actually started the question yet, but this is a revision course, so I wanted to make sure that you are clear about the method, because indexing in the wrong places is one of the more common problems with this style of question. And particularly for this one, because there was a bonus issue, and then there was a disposal, and then there was a rights issue, then there was a disposal. There's a lot going on. So I prefer, personally, to have it sketched out in a little timeline, in a little bit less detail than this if you want to. But as a minimum, I would like to see, let's show you here. As a minimum, those bits. So I don't mind if you don't do all this. You can actually do that as part of your table, part of your final answer, but I would like to see a timeline that shows there was a bonus issue. Oh, and then I did indexation. Oh yeah, and then I did a disposal. And then I did some more indexation. And then I did a rights issue. And then I did some more indexation. I want to see at least this part. Don't mind if you don't do the extra detail. That was more, I suppose, me helping you with a little bit of revision over the rights issue and the bonus issue calculations, but we're going to do those in our main table anyway. But at least that first part, I would like to see that as part of your workings. I think it has a huge help to get you through this sort of question, because I'm going to refer to it now as we go along. So let's go without further ado. So I use the timeline a lot now. In October 01, I've got a purchase. 8,500 shares, give it a tick. This is the one that I'm dealing with. And of course I pick up the cost from the question. £89,400. And the indexed cost column, that simply means this column includes both the cost and the indexation together. Great. What happened next? Next thing that happened in August 05 was a bonus issue at 1 for 4. If you've already gone to the effort of doing the working in your timeline, then great. You already know how many extra shares to add. If you haven't done it in the working, then you can do it now. That's also fine. Zero cost because it's a bonus issue, and a zero impact on the index cost column because it's a bonus issue. It's free shares. Okay, refer back to the timeline, see what happens next. There's my bonus issue. That one's done. The next thing that happens is it says, oh, you need to do some indexing. And the reason you need to do the indexing is because in September 2008, you've got a disposal. So I would be tempted, and I don't think you can really have too many subtotals in these sorts of questions. I think they can help you. I would be tempted, even though it's not actually necessary, but I'd be tempted to do a subtotal there. I always like to have a little subtotal before I do any indexing. So I'm going to do some indexation, and I'm actually going to include it in my indexing, and I'm going to include where it goes from and to. So from October 01, let's just check what we said. October 01, skipping past August 05 like it's not there, right through to September 08. And the reason I want to do that is because I want to show the examiner what my reasoning is, what my calculation is. And I'm going to index the indexed cost column. So whatever is in the indexed cost column is multiplied by the indexation factor. So if by some chance I picked up the wrong indexation factor from the question, but the person marking this task could see that I thought I was doing October 01 to September 08, the chances are I'm going to get a little bit more credit. So the indexation, of course, doesn't affect the number of shares, it doesn't affect the cost, it only affects the indexed cost column. Okay, another little subtotal. So I've now got the balance of shares after the indexation. The pool is completely up to date and it's ready for me to do my next transaction, which was the disposal. That was the whole reason for doing the indexing. It's because I wanted to process a disposal. You can see it there. You've done the indexation, give it a tick. You're in September 08. You dispose of 3,500 shares. We're not asked to find the gain for these. We've just got to get them out of our pool. Just going to put a little working underneath here. So otherwise it's going to run out of space in my actual table. But my working for this would be to say you've got 10,625 shares in the pool and you've disposed of 3,500 of them. So you've got two approaches here. What you need to recognise, I suppose, is that 10,625 shares have cost £89,400. So if I started off here by finding the cost per share, so the cost divided by the shares, that would give me the cost of one share. I probably wouldn't even stop in the calculator. I'd actually just keep the working going, leave that number in the calculator and say I didn't dispose of one share. I disposed of 3,500 of them. So however you do the working, you're going to get the same answer. You don't have to lay it out like this. But I've got an answer of 29,449 has been the cost of the shares disposed of. Remember though, we've also got to deal with the indexed cost column. So very similar idea. You take the balance from the indexed cost column, you divide it by the number of shares that it relates to, and you multiply it by the number of shares that have now been disposed of. So it's just about proportions. What proportion of shares have been disposed of relative to the shares in the pool. Everything is rounded to the nearest pound. I can take those two answers and pop them in here. There we go. And at that point I can do a subtotal so I can see what I've got left. So there are certain strategic points where you need to have a subtotal, such as immediately before this disposal. There'll be other points where you don't really need a subtotal, but I think rather than racking your brain to try to work out, do I need one, don't I need one, sometimes it's just as easy to actually leave a space to put one in and then just get on with it. And there's no marks lost for the extra subtotals, even if they're not really needed. As it turns out, at this point, I've done the disposal, so I've ticked that one off. The next thing I do is more indexation, and I need to index, so I need totals, so I did need subtotals there. So I'm now going to index from September 08 to November 10, which is here. And I index the indexed cost. So I'm going to say, let's see if I can fit it all in one row so I don't use too much space. So indexation allowance, it's going to be from September 08. What did I say? Till November 10, right. I index the index cost column. Pick up the indexation factor from the question for that period, September 08 to November 10, and pop it into the indexed cost column. It's an inflation allowance. That's the only column that it affects. Okay. Just in the interest of not running out of room, I'm not going to subtotal there because I know that I don't actually need to. So I'm just going to go on to the next part of the question, which is to do with the rights issue, because the pool is completely up to date now. I've just got something else I need to add in. I need to add in one new share for every 5 I've already got. It was November 10, wasn't it? Let's put the date in. November 10, rights issue 145. So one new one for every 5 that I have already got. We've got 7,125. We've actually already done the work in for this, but if you hadn't, this would be the opportunity to do it. But the rights shares are not for free. The rights shares cost money. So each of these shares that you are purchasing have a cost attached. And I was told in the question the rights shares cost £8.25 each. So that's 11756, and that's added to the cost and the index cost column. Remember, index cost is just cost and indexation together, so whatever I put into the cost column also goes in the indexed cost column. So I've now got the indexation up to date, the rights issue added on. I'm a step further on. Okay, at that point I would do a subtotal, because the next thing that's going to happen is more indexation, so I'm going to need some up-to-date totals. And I hope what you can see by using my timeline is that once you've done the timeline, you've actually done the hard work. By working out when you're going to index and all those other bits and pieces, we're now just following our own method. It's like we've written our recipe down, we just need to follow it. Otherwise, I think in the midst of this question with so much to think about, very easy just to forget something. But having it all here and just saying, yep, done that one, okay, yeah, rights issue, check, done that, no problem, what do I do next? Next thing, oh yeah, okay, can't do the sale yet because indexation was frozen, so let's do our final indexation, November 10 to December 17. I index the index cost column. So picking up the indexation, November 10 to December 17, that one, 0.284. And bear in mind, the question may well give you indexation factors that you don't need, because it wants to see if you know which ones are the right ones. If it only gives you the right ones, then there's a better chance you're going to get them right through luck rather than through judgment. So my pool is now completely up to date, and I can deal with my last transaction, which was the disposal. So January 2024 was when the disposal took place, and the timeline tells us 3,000 shares were disposed of. Probably want a little working for this, I'd suggest. So the cost column shows £71,707 in it, and that relates to 8,550 shares. So if I take 71707 shared over 8,550, that gives me the cost of one share. I'm not going to write it down, I'm going to leave it in the calculator. I'm going to say I didn't sell one share, I sold 3,000 of them. So I'm just going to use that figure that's in the calculator and multiply it back up again. And then I'm going to repeat that exercise, but using the index cost figure, shared over all the shares, and multiplied by the number of shares that have been disposed of. And then we're nearly done. So we can dispose of the cost of the shares that have now gone. We can dispose of the index cost of the shares that have now gone. We can then do our subtotals. And the question specifically wanted us to put together the share pool with specific reference to include the balance carried forward on the share pool. And that's what that last line is. So I wouldn't just put the figures in there, I would label it as balance carried forward. That's the balance that is remaining on the share pool after this disposal has been dealt with. Part B of the question goes on to say then, can you calculate the gain or the loss, if there is one, on the disposal of the shares that happened in January 2024? There was another disposal. Way back here, we dealt with it, we removed the shares from the pool. We're not asked for the gain on that one, we're asked for the gain on this one. So only the January 2024 disposal for us to have to think about here. So what would we do? We'd bring in the proceeds, And we would, two ways to do this. I'm going to show you my preferred way, and then I'll show you the shortcut. So we would deduct the cost, and then we would deduct the indexation allowance. And that would give me the gain. So I'll show you why it's my preferred method as well, and then I'll show you the other method. In fact, let me just move that gain line down so I can show you the method side by side. There we go. Okay, so proceeds. What did we sell these shares for? I'm sure the question told us that. In January 2024, David sold 3,000 shares for £63,900. So proceeds are 63,900. The cost of the shares disposed of was this. 25,160. So the indexation on the shares disposed of is the difference between 25,160 and 39,028. Because that 39,028 is cost and indexation together. So if I take that figure minus the figure that I know is the cost, then that leaves me with just the indexation. So 63,900 minus 25160 minus 13868 gives me a gain of 24872. And the reason I prefer that layout is simply because of the rules about indexation allowance. Indexation cannot increase a loss. Indexation allowance also cannot create a loss. And I suppose I just feel that if the indexation and the cost are all muddled into one heading, then I end up with a loss at the end. How do I even know if that loss is due to the cost, or if that loss has been caused by the indexation? So I prefer to split them. The alternative, which is absolutely fine, as long as your final answer is a gain, would look like this. So proceeds, 63,900. And instead of deducting cost and indexation separately, you would then deduct indexed cost. So you'd take the full amount of 39,028 from the indexed cost column. And as long as the final answer is a gain, absolutely no issues with that method at all. So you may prefer the second one, of course, it is a little bit quicker. And as long as you've got a gain at the end, this method works 100% of the time. If you end up with a loss, then perhaps just go back and think, okay, I've gone with the shortcut, but it's given me a loss. Now I'm going to go back and use Anne's slightly longer method so I can understand the impact of indexation on that loss. And that's it. Big shares computation there. Took us a little while, but I think it was important to go slowly through my method, particularly in terms of the shares order, the rights issue, the bonus issue, when to index, when not to index, and so on. So I really, really do advocate for at least an abbreviated version of the timeline for that one. Make sure I'm getting all the right things at the right times. So it might be worth having another go at that question, or perhaps having a go at another shares question when you get a chance, just to check that you're confident with how to get through that one.